Welcome back, traders. This is part 3 in our Forex Strategy series. Today I'm going to teach you something extremely important. How to avoid fake breakouts and false entries using flat zones, market psychology, and moving averages. If you've ever entered a trade only to see the market reverse immediately, this video will help you fix that problem forever. Let's begin. Most fake breakouts happen because traders rush into the market too early. Here's the truth. Most beginners don't know. The market loves to trick impatient traders. Price will spike above a resistance, then dump, spike below support, then reverse, breakout for one candle, then return inside the zone. Why? Because the market is removing weak traders before the real move begins. This is why your strategy focuses on flat zones plus confirmation, not just breakout candles. A flat zone is not just sideways movement, it is the area where buyers and sellers are fighting. The market is building orders. Big traders are waiting. In your strategy, the flat zone is your filter. It tells you whether the breakout is real or fake. Here's the rule. A breakout is only valid when it happens in the direction of the trend line, and when your income arrow confirms the move. Anything else is noise. Let's compare the two. Fake breakout. Breaks the flat zone but goes against the moving averages. No income arrow. Happens when price is too close to MA 200 or trapped between MAs. Candle closes weak. No trendline support. Real breakout breaks the flat zone in the same direction as the trendline candle closes strong. Supported by MA 10, MA 50, MA 100 income arrow appears immediately or after 1 to 2 candles. Clear room for price to move. Your job is to avoid the fake ones and wait patiently for the real one. This part is extremely important. Use MA 50 and MA 100 as your boundary lines. In an uptrend, if price tries to break the flat zone but stays below MA 50, that's a fake breakout. Wait. In a downtrend, if price tries to break the flat zone but stays above MA 50, that's a fake breakout. Wait. Use MA 200 for deep pullback confirmation. If price crosses MA 200, you wait for 1. Price to return, 2. Trendline direction to confirm. 3. Income arrow to appear. This removes 90% of fake entries. Professional traders don't rush. They wait for their setup to form naturally. Here's what causes traders to lose. Fear of missing out. Impatient entries. Entering too early before flat zone breaks. Trusting one candle without confirmation. Trading emotions instead of structure. But your strategy fixes all of this because you wait for the trend line, you wait for the pullback, you wait for the flat zone, you wait for the breakout, you wait for the income arrow. This is discipline. This is how pros trade. Before entering any trade, follow this checklist. Buy checklist trend line pointing up MA 10 above MA 50, above MA 100 price. Pulls back into MA 50 or MA 100 flat zone forms breakout above flat zone income. Buy arrow appears, enter buy. Sell checklist trend line pointing down MA 10 below MA 50, below MA 100 price pulls back into MA 50 or MA 100 flat zone forms breakout below flat zone income. Sell arrow appears, enter sell. Follow this checklist every time and your accuracy will skyrocket. Remember this one sentence. Real breakouts respect structure. Fake breakouts disrespect structure. Stay patient. Follow the rules and let the market come to you. If you learned something powerful today, like the video, subscribe to the channel, share this lesson with other traders, and join the channel membership for private Forex trainings and live analysis. This was part 3. I'll see you in part 4.